let me give you guys kind of a rundown of where the lending industry's at, because the lending industry being so key to each piece of what you guys are doing. There's been a lot of changes in the last month and a half, and so I'll fill you in. So a month and a half ago, the industry had a lot of volume, and the interest rates were very low, and that was why the volume was there. When the industry got an exorbitant amount of volume, the mortgage industry decided, hey, we're going to put on the brakes. And how do we put on the brakes? We're going to raise the interest rates. They raised the interest rates, and that started slowing down the originations, and that helped the industry. But what happened right after that? So we got through the volume problem within about a week and a half to 2 weeks. And then right after that, we hit a liquidity crunch, the industry did. And what was happening is all the big players in the mortgage market, the servicers and that kind of thing. Chase is one of the biggest servicers. Penny Mac, Fannie Mae, Freddie Mac. I could list names for forever on that. But they started becoming fearful, and the reason they became fearful was due to the legislation that was put out to help in theory, to help the homeowners. But it allowed the homeowners to go into forbearance or skip up to 6 monthly payments. Well, the legislators didn't do a very good job of thinking through what did that just do to the mortgage industry. The mortgage industry takes it on a chin in a case like that. So what happens is, if a borrower goes into forbearance, even though the borrower is not making the mortgage payment, the servicer still has to make the payment to the bondholder. The bondholder is the owner of the mortgage. So you got servicers that are servicing loans for what's called servicing fees or servicing rights. And then you have bondholders, which are the owners of the loan. So imagine these servicers holding all these millions of loans, and these loans are going into forbearance, and the servicer has to pay the bill to the bondholder, but the servicer's not getting the monthly income from the borrower. So now all of a sudden you got a huge liquidity crunch in the servicing sector, and that was all man-made because that was due to the legislation that our congressmen and women came up with as an attempt to help the homeowner. It was a nice try, but boy, did they swing and miss. So what's happened is a lot of the major players in the industry have pulled back, and either they've pulled back and they're not lending at all, or they have pulled back and they've raised their credit requirements, they've lowered the maximum debt ratios, they've lowered the maximum loan to values, and they basically are taking the tact of, Chase just raised their credit limit requirements to 700. They will not fund a loan of any kind below 700. And it used to be you could do loans down to 620 and down to 580. So those days are kind of gone for now. So what are we waiting for? Where are we headed? Well, what we need is stability back in the mortgage industry, and how we get the stability can come from a couple different angles. What we did get was very good news this morning. Wall Street Journal was reporting that Fannie Mae and Freddie Mac are going to announce this week that they're now going to buy all these loans that went into forbearance, so that it takes those loans off the servicer's plate, and the servicer doesn't have to keep paying for loans that borrowers aren't paying for. Fannie Mae and Freddie Mac will backstop those loans, and that brings stability back to the market. As soon as they announce that, and as soon as they start to do that, that's going to do a couple of things. That's going to, number one, stabilize the industry quite a bit. And shortly thereafter, we already know, it's a fact, interest rates are going to drop. And they're going to drop pretty significantly. The reason I can tell you they're going to drop significantly is Wall Street sold off a third of its value in less than a month. And when Wall Street's selling off, that's I hate to say it, bad news for Wall Street is good news for mortgages. Also, the U.S. Treasury is buying $300 billion worth of mortgage-backed securities, and they're buying $400 billion worth of U.S. Treasuries. Those two things alone, Wall Street selling off, and then the mortgage-backed securities and the U.S. Treasuries being bought by the U.S. government, would have interest rates in the 1% to 2% range. Do we expect them to get there? Yeah, we do. We know for a fact those interest rates are going to come down. The only question is when. And the question is, it's going to happen when stability comes back into the market. So that's one piece of the market. Now, the potential bad news in the market. So when the U.S. government allowed all these loans to go into forbearance, they told these borrowers, hey, it's not going to affect your credit, and we're not going to show any 30, 60, 90-day lates on the credit. That piece is true. What they didn't know is contractually obligated, the servicers of those loans are required to report those loans not as paid as agreed, but they are to report them as in forbearance. What's in forbearance? It's a fancy way of saying default. So here's the real question. These people have 6 months that they can skip payments. So what happens at the end of the 6 months? Well, some lenders, some servicers are going to come back and say, hey, we went all 6 months back, plus you're in the 7th month, we went 7 months worth of payment. And borrowers are going to say, can't do it. I couldn't save. I was laid off, whatever. What's the next option? Then the next option might be that the borrower or the servicer says, okay, well, listen, I'm going to take these 6 months that you missed. I'm going to spread it out over the next 12 months. And so now you got to pay your normal monthly mortgage payment, plus you're going to have to pay another half a mortgage payment in each individual month. Maybe that'll work for some people. Maybe that won't. Another option is the servicer could take those 6 months worth of missed payments and put it at the end of the loan. If they put it at the end of the loan, that's great. It doesn't really, the servicer's not losing any money. And so long as the borrower can pick up and start making their 7th and 8th and 9th monthly payment as they were supposed to, that could work. And that would probably be the best choice. And I hope the U.S. government figures that out and instructs servicers to have them do that. But I don't know if the U.S. government's going to do that. And the fourth option is the servicer starts foreclosure. So we currently, as of, I'm trying to think, I think it was as of late last week, the amount of VA and FHA loans that were in forbearance was in the $350 billion range. Huge, just unbelievably huge. All these people that went into forbearance already, right? Not all of those people are going to get foreclosed on, but guaranteed, there's going to be a number of those people that do get foreclosed on. When are the foreclosures going to start happening? Well, you got to go out 6 months. They're going to miss the payments for 6 months. And then they can't just go right into foreclosure. They have to put the proper notices on the file, and it takes 90 days for them to foreclose. So the earliest that we're going to see foreclosures is probably going to be about 10 months to 12 months is when the foreclosures are going to start. When the foreclosures are going to start, that's going to start bringing down house prices. No choice about it. Going to bring down the house prices. But for investors, real estate investors, you guys are the winners. That's when you're going to make your money. That's when, Kim, you said the deals, there was no deals on the MLS. Well, just wait a year and start seeing what the deals are going to be looking like. The winners are going to be the investors. Unfortunately, some people that are homeowners are just going to lose. And that's in part because our U.S. government didn't handle this correctly, but it's also because it's a virus. No one can handle this. Who knows what's coming, right? Is the virus even going to, are we going to be able to, stamp it out and get it down to a reasonable level? Or is the virus going to come roaring back? We don't know. But we do know the more that virus hangs around, the more havoc it's going to create. So that's the state of the mortgage industry right now. And the mortgage industry is kind of more the driver of your guys' industry. So it's some good news and some bad news. The other good news is when the interest rates fall to the 1% to 2% range, they're going to stay there for probably a year to two. They can't afford to go up. the reason they can't afford to go up is our U.S. economy. Look at how many billions of dollars we're going to lose because of this. We need to come roaring back like a lion for probably 2, 3, 4 years to kind of get past this. They cannot afford to mess with those mortgage interest rates once they are down. So they are going to be down for quite a while. And it's going to be good buying opportunities. So a little slowdown right now is maybe not a bad idea, but you better be ready because somewhere about 10, 12 months, it's on. It is on. And if you got properties that you need to refinance right now, or that just you're buying in some other way, I tell all my customers, get your application in before those interest rates drop, because once those interest rates drop, everybody in the world is going to be trying to refinance. And if your applications are in prior to them dropping, we're going to get the heavy lifting done on the loan in advance of the interest rates dropping. As soon as the interest rates drop, we'll lock your loan, we'll order the appraisal, close you out in 2, 3 weeks. If you wait until those interest rates drop and you're one of the millions of borrowers that are trying to refinance or buy, you're going to have a 60, 90, 120-day closing, and that's going to wreak havoc on your locks. So if you're thinking about doing anything at all, you should do it now. Don't wait. So that's my spiel. Dennis, did I scare you? No. I think you'll find a lot of good information on BiggerPockets. And if you keep coming to meetings like this, and if you ask questions, right now what I'd like to do is, if anybody has a question of anybody else, please unmute and ask your question and get your questions answered.
The scary part's just committing.
It is. But, you know, it's like that in, let's see, it's like that in real estate investing and marriage.
You are so lucky your wife is not here.
Oh, by the way, Caitlin is my daughter. So her mom, yeah. Any questions?
Kim, you said you did direct mailing postcards. This is kind of off topic of loans, but since I do the marketing, I was curious how that worked for you.
It worked well for me, but it was about a year and a half ago. And I don't think, from what I'm hearing, I don't think it's working quite as well now as it did then. It's still working, but not quite as well. But yeah, I tried a few different angles with it, and that's how I got all my wholesale deals, and my wholesale deal was all through my direct mail marketing. So I think it's a really good form of marketing.
I missed, what did she do?
Wanted to try something different, because when I was marketing, people were just starting to get the postcards and letters in the mail, 1 or 2. Now those sellers are getting 20 of them in the mail, and all the time. So it's lost a little bit of its effectiveness, in my opinion, but I'm no expert.
How did you pick your area that you sent them to? Because I consider myself a baby marketer. Like, I just am starting out, so I need more information on these things.
So I worked, I created my list through ListSource, and I learned how to do that in some of my training, and I just marketed. I think I marketed to Lewis, Thurston, and Cowlitz counties. I can't quite remember. That's what my outreach is now, is Lewis, Thurston, and Cowlitz, because I live in Lewis County. So I didn't want to really have to go farther than that.
Okay, yeah, that's kind of what we're looking at, is the same area, and maybe postcards. I don't know. We're still learning.
Yeah, I tried. I did quite a few different lists. I did an inherited list through lead list, and then I did my list through listsource, different using different criteria. You know, it just depended on what I was targeting at the time.
At this time, do you guys have any suggestions on topics that we want to talk about? Any areas that you want to know more information? I know Rick is going to do a presentation for us in is it June, Rick?
Yes.
Okay, June. Rick's going to do a presentation for us in June. He's in the middle of a brewer model. He was able to get a really good deal in Hoquiam, and things got moving. And unfortunately, he's just kind of stalled right now, just because of we're waiting for the state to open back up. As soon as that opens back up, he'll get rolling with that, and then he's going to, when it's all said and done, he's going to refinance it and hold it as a long-term rental. But is there any topics that you guys want to know more about? We would love to take that list. And Caitlin, can you grab that information as they throw it out?
Now, did you get the date set up for June yet?
Yeah, in June, we're going to do it. Oh, wait, did we? No.
We haven't gone that far out yet. I will look at that as soon as I'm done. And
Okay.
this week we'll work more on making sure we have the future meetings planned for the dates.
All right. Try to make it before the 17th. I'm scheduled to go to Texas on the 17th through the beginning of July.
What's in Texas? The great
What's
state
that?
of. What's in Texas? The great state of.
Oh, I'm going to go and visit my aunt and uncle that I haven't seen in several years, and it's been a long time, and we need to go see them before we can't.
Yeah, probably makes some sense there. I get that. I got family in Oklahoma. I haven't seen them in a lot of years. Okay, so some of the topics that we're thinking
For
about-
me as a newbie,
Yeah.
I think one of the things that is scary for me is the networking of the contractors and dealing with the city and the codes and all that stuff. So, and you know, I mean, putting a deal together and then not having a roofer and not having a plumber and not having all these people, then you know, that's the part for me. So I don't know what that would be as a topic, but I'm sure maybe Crystal would have the right terminology for that.
Yeah, we've
Yeah.
been coming to see you.
That's funny because I just asked Crystal on a private chat, okay, how is she getting her contractors? Because that's an issue that I'm finding as well.
Okay, I can touch on that. Damien is a general contractor, so he runs the jobs, which is nice, but it's not necessarily ideal. He does do some subcontracting. It is, I would say, one of the toughest parts of it. But over the 2 years we've been doing it, we have built a relationship with contractors that we have trust with them. They do a good job. We, can trust their pricing and all of those kind of things. So part of it is, it does take some time. There's great sources of referrals. Like I kind of mentioned to Rick, going to the Vestas meetings doesn't mean you have to buy anything, but it's a great way to start, seeing what other investors are doing and talking to them. And, they may or may not be willing to share, their resources, but sometimes they are, or like this kind of platform can be a way to do it. I know Bigger Pockets has some referrals for different contractors and all kinds of different things. That's how I met Kevin. So it's, it is a challenge. It's definitely doable. It's just a matter of, really just getting your fingers searching around. We have done all the landscaping ourselves up until this point, and this has been the first time this week I started calling landscapers, getting quotes, and that is just, that's a new subcontractor that we are going to now try to start having somebody else do it because I'm tired of dealing with blackberry bushes.
Right.
So I wanted somebody else to deal with it. But that is a challenge, you know. I mean, just today I got a quote for this 1 yard. It's about 1/8 of an acre, not huge. For one quote was at $19.50, and which I thought was kind of high. It's not. I mean, it's blackberry bushes, but it's really not that bad. And the second quote I got was $5,200, and I about jumped out of my chair. Like, okay, thank you for calling back. So, you know, I mean, I might have to call 20 landscapers and have 20 people go and give me a quote. And, you know, maybe I use one on this project and another one on the next project, the ones that maybe felt more reasonable, and see the work they do. So it's kind of a trial and error thing. There's just no simple answer for that.
Right.
But it's, yeah, just building relationships, finding people. Here we go.
Hi, guys.
His 2
Amy's
cents.
back. All right.
My 2 cents. Sorry. So the advice that I can offer on the whole contractor thing is that you're absolutely right. The hardest thing that I find, even as a contractor and doing these flips, is like I could do 1 million flips, but I don't have enough contractors to do them. And so the one thing I can tell you guys is that make sure when you make your money when you buy these properties. So when you buy a flip, that's when you're going to make your money. As far as the contracting and that kind of thing, you want to try to budget accordingly. And so when you guys go in there to budget these kind of things, I would recommend pairing up with a GC, calling around to a general contractor like myself, or even just getting advice from other people who are doing these flips to kind of walk a house with you, point out the kind of things what it's going to cost, real values. And then, give yourself plenty of time. Your first flip, your first 5 flips, take them slow. If it takes you calling 10 contractors to get out there to find one that you like, that doesn't seem like some drug addict and has a fair price, that's what it takes. Just take your time. Don't be in a rush. People make bad decisions when they're in a rush to get the project done because they just hire whoever shows up. Whatever beating heart is sitting at the door, they get them in contract, and then all of a sudden, they're dealt with this huge mess. So, just trust your instincts, and don't be afraid to call as many contractors out there to get bid after bid after bid. That's going to be your job when you become a flipper, is just spending time talking to people, trying to negotiate prices before that person now becomes in bed with you. Because every contractor you hire is a partner in a way. So you just gotta, adjust accordingly.
Right on.
So maybe it's just the market area that we bought our house but the difficulty that I've been facing in identifying contractors is just getting them to return my phone call.
Yeah. Well,
once I get them on the phone and I talk to them, that getting bids and actually having them be somewhat reasonable,
right?
Well, except for the one electrical contractor, that's the easy part. It's just getting them the answer to the phone. Plumbers down there in Grays Harbor, I leave 15 messages on 5 plumbers and not one call back.
Right. Mm-hmm. And so there's a really good thing happening right now, with this whole housing crisis, or not, I'm not calling it a crisis yet, but with the housing stalling out the way that it is, the contractors who are crappy are not going to continue working. And the ones that were really good are going to start to have some more free time. So it's actually a really good thing that when a market kind of does this kind of adjustment, let's just say, because a lot of the crappy contractors will start to fall away. People are going to start to have more of a choice. When we get into these really inflated markets where the market's just booming and housing this and that, everyone out there is a contractor now. Everyone is a professional. Us as people trying to get contractors have no choices. All the ones that are really good are busy and they're not going to return your phone call. And the ones that are not so good are the ones that return your phone call immediately and they can get started tomorrow.
Oh, yeah.
and so hopefully with this kind of lull, hopefully some of those crappier contractors will kind of get weeded out and kind of fall to the wayside. We see it happen with even the last 2007, 2008 kind of a downturn. Those crappier contractors kind of fell away, and the better ones kind of rose to the top. So, be persistent. The ones that don't call back are the ones that are busy. More than likely, those are the ones that you want. Being a little bit of a harass and calling and texting or whatnot. I mean, hey, you got to do what you got to do to get the good ones. The ones that answer their phone call and they're like, hey, I got a minute, I can come out and look at it right now. Be leery, because they're not busy for a reason, mostly during busy times like that. So hopefully that helps. I don't know if it does or not, but I mean, feel free to reach out to me or Crystal if you guys need any assistance. I'm pretty blunt and open about things. You get used to it. After you do a few flips, you start to understand what things cost and what things should cost. So when a landscaper comes at you and says $5,500, you can tell them to kick the rocks. And when a landscaper at you at $1,900, you go, okay, that's still too high. Let's talk. And if you get a contractor who comes out to you guys and says, hey, I'll do it for $2,500, and you kind of hem and haw and you go back and forth, and he goes, all right, I'll do it for $1,900. Tell that guy you'll think about it and wait for him to call you back, because he'll call you back and he'll tell you $1,500. A lot of the contractors who shoot from the hip will give you a price right on the spot. They're just inflating their price so high, hoping that you'll take it. I tell contractors who even work for me that go home, massage your bid, because this is the one time that I'm going to look at it. That's it. And I tell them to come at me with their best offer that's reasonable for them to make money and for me to make money. That's it. And for the most part, I get pretty good contractors that way.
Sounds like you've got a fair amount of negotiation, or there's enough room in there for you to move the numbers around on an average bid. Okay.
Yeah. And you got to understand, all the contractors, they got to make money. I tell all my contractors, my long-term contractors, that if you're not going to answer my phone because you're bidding my job so cheap, I don't want that. I want you to answer my phone when I call and be ready to make money when you work with me. But I also want to make money myself. So you just got to do something that works.
That's just it. You're a partner with everybody, and everybody should win. You want to win-win everybody.
Yep. And that's how you're going to create a great contractor base. Is just having a good understanding that, hey, they want to make money too. Everyone wants to get rich. Everyone wants to, provide. So.
Awesome. Appreciate that very much. And since I'm at it, I'm going to go ahead and just put a plug in for Julia, because All City does do a great job. I use them for our store. I've seen the work that they've done, and so I'd highly encourage you guys, when you're prepping your houses for sale or rent, call Julia.
I will. Thanks.
I'd be interested in talking to Julia.
Yay. We do windows and carpet shampooing too.
Okay.
Windows.
Yeah.
I like it. It was nice to meet you guys.
Very good. So let me, so our next meeting is going to be on May 12th from 6 to 8. And on that one, I'm going to speak a bit more about the mortgage industry, but we'll leave it as a roundtable. There's not going to be one big topic unless you guys have questions, or if you want to take it in a certain direction. Then in June, Rick's going to do his case study on his BRRRR model. By then, I'm hoping the state's open and you've got your contractors and that kind of thing. So that we can hear even more good news out of that. And then I want to remind everybody, if you haven't become a member with South Sound Real Estate Networking, please do so. And then if you go onto my personal Facebook page, I also have my business Facebook page there. And then go find me on YouTube. It's just Kevin Romines, and subscribe to my YouTube channel, because we're recording all these content, and any and all future meetings. If you can't make a meeting or whatever, but you want to catch the recording, you can do it there. We're also going to start publishing this out on Facebook, and this one came together quickly. Next time, I think we'll probably have a few more people, and the more people, the more collective knowledge there is. And I think it's just good information for everybody to share back and forth, and good content. So we all have our expertise, and that's good for everybody. So with that, let me share my screen. That's Caitlin's handiwork.
Just imagine like really cool music playing here because we forgot to press the sound button, but it's really cool sounding.
Oops, I blew it. And if anybody wants to present at future meetings, please reach out to Caitlin. She will get you in and we'll get you set up.
All right. Great job, Kevin. Thank you very much.
Thanks, Kevin.
Thanks, everybody, for showing up.
Nice to meet everybody.
Till next time.
Bye, thank you.
Kevin
Well, thank you.
Bet.
and Caitlin.
Yeah, she is the one that keeps me on track. See you guys.